There's a lot of uncertainty out there for buyers and sellers right now in the real estate market for the United States. So I want to bring a lot more clarity to this. This is the report that we do once a month where I go through different slides and give you a really good understanding of what's happening and where we're heading in the real estate world for the United States. And we're going to cover a few things here, but number one that I want to share with you is going to be new construction, because there's something happening there that I want you to pay attention to, where new construction is now becoming a challenge for some of the homes that are for sale in those areas where new construction is coming in under value, under normal market value, and they're giving amazing incentives. And then where are we heading as far as interest rates, as far as a real estate market? Is it going to be the same everywhere where prices start dropping so it becomes more affordable for buyers? That's what I want to talk to you about. With that, let's just get right into this. Buyers should be looking at new construction right now. Here's why. You have this great graph, and this one goes up to about May 2025. We're in July right now, but newly built home inventory continues to rise. We're going to see that happen for the next probably few weeks, maybe months. Now, as builders in areas like Florida and Texas and even parts of California are now getting funded by private funding, saying, hey, you guys want to continue to build, number one, let's not build where we're already having to discount, but let's build a little smarter, build in those areas where there is still demand. And so you're going to start seeing that number now start decreasing in certain areas, which could be a problem 2 years from now, where we see builders now cutting building. So pay attention to that right now. It's an opportunity for buyers where you have a lot more builders throwing out inventory and say, hey, I just want to get rid of this inventory before prices drop even more. This is from Zonda. 57% of new home communities in May offered incentives on to-be-built homes at 75% on quick move-in supply. That's a crazy number to pay attention to. We've got to see where is inventory growing so that we can go in as buyers and not only come in and offer less, but get these incentives. Look at this. New home buyers are getting an increasingly large mortgage rate discount. The blue line are existing homes, so those homes that are just reselling, not brand new construction. Green are newly built homes. Now look at the rate on the left. Look at the interest rate. This is the interest rate for mortgages. Because builders can come in and say, hey, you know what, if you're going to buy, not only are we going to offer a price that's less than the asking median price, but we're also going to throw in a great rate for you on top of that. And that's what you're seeing is happening, which is driving the markets in those areas a little down faster. And pay attention to that, because that number I think is going to increase as this inventory gets harder to sell. So watch in your area. This is by Joel Berner, senior economist at Realtor.com. The main reason that mortgage rates are lower for new homes is that builders are offering below market rates to buyers as an incentive to close deals, primarily through mortgage rate buy downs. This is what you're going to start seeing more of. Check this out. This is through June 2025. More and more builders are cutting prices. And you're going to see this. We're in the middle of the summer where more buyers typically come in, and people, owners, new builders don't have to cut prices. So what does this mean when the market slows typically down, where you have winter slower, summers hotter? Does this mean we're going to see the number increase? My prediction is yes. We're going to see builders that have this oversupply of properties are going to not only get more aggressive, but they're going to give lower prices, lower interest rates, more incentives. Watch out for that. This is by NAHB. The latest HMI survey also revealed that 37% of builders reported cutting prices in June. This is just about a month ago. The highest percentage since NAHB began tracking this figure on a monthly basis since 2022. Now, check this out. You may have seen this one at different places. Redfin put this one out about a month ago or so. Buyers and sellers dynamics have shifted. Estimated number of buyers and sellers active in the market, and you have that little green line, that line right there, those are sellers, right? Now, all of a sudden, they're outgrowing the pace of the buyers. Now, Redfin came up with this whole strategy of taking into consideration what certain buyers are looking for based on how much and in what areas they're searching and saying, oh, you know what, there's less and less buyers that can afford things in these areas. And that calculation is how they came up with this. Ultimately, though, whether or not they're extremely accurate or not, what you have to watch out for is affordability. The biggest reason for this is affordability. A lot more sellers are coming up and they're saying, okay, I guess it's time to sell. Let's go in for a price maybe that isn't the price that it should be now. And buyers are still saying, well, interest rates, mortgage rates are super high. We can't continue to afford this. And look, we're in July now where we thought maybe we were going to get interest rates, mortgage rates easing out, but they're still in the high sixes. And I'm not sure that that's going to continue to get any lower. Now, there is a buyer and seller imbalance. You're watching it happen, but it's not equal everywhere. Take a look at this here. By the Associated Press, fewer buyers means less competition for home listings and more pressure on sellers to dial back their asking price and make other concessions to help get a deal done. That's a stark reversal from just a few years ago when it wasn't uncommon for homeowners to receive offers well above their asking price. Now, on that note, though, one thing we are noticing is that there's a report by Realtor.com that came out just a couple of weeks ago where they're noticing that there are a lot more sellers that are saying, hey, you know what, we're not getting the price that we want. We know that the market has softened in our areas, wherever they're at. Let's just take the home off the market. We've got a great low rate in the 3s or the 4s. We don't need to sell. We were just testing out the market to see if we can maybe buy something else. Maybe we'll just refi. And that is something that's picking up steam. What does that mean longer term in the areas where we still have inventory challenges? That means that maybe there's going to be less and less inventory if buyers start picking up what is there at a lower price point. So keep an eye on that because I don't see a lot of people talking about that either. Let's continue on this one. You see Andy Walden. This is ICE Mortgage, nothing to do with ICE, right? It's a big conglomerate of a lot of good technology for the mortgage and real estate world. We continue to see an inflection in the housing market as home price softening expands beyond the Sun Belt into the West, with inventory levels beginning to normalize across much of the country. Prospective home buyers are finally beginning to see some long anticipated price relief. Now we're seeing that again in Florida, Texas, part of the Sun Belt area, some places in California, and the opposite as well in California. But the Northeast is a different story. They're still selling in less than 14 days and you're getting multiple offers. So it really depends on what area. Here's a really interesting graph to take a look at. Home price growth is decelerating. This is what Zillow is saying. Percent change in national home prices year over year. And you see all of a sudden they started to drop nationally. And we're wondering, is this going to catch on to other areas? Well, I'm going to say it will catch on all throughout the United States if mortgage rates don't start dropping, because the amount of property values going up and up and up can only reach so much because affordability becomes a challenge, right? And also, how does the unemployment look? How does the economy look overall? And what about the whole tariff situation? What happens when that catches on? Is that something that's going to affect the economy? Those are unanswered questions that we need to pay attention to as those progress. This is again NAHB. House price growth slowed in the first quarter of 2025, partly due to a decline in demand and an increase in supply. Persistent high mortgage rates and increased inventory combined to ease upward pressures on house prices. These factors signaled a cooling market following rapid gains seen in previous years. Pay attention to what I think the key thing to this is high mortgage rates, because if we see those turn around, this could change. 22 of the 50 largest metros have falling home prices. You can see on the right, Texas, Florida, a lot of Texas and Florida in those areas. And obviously during the pandemic, we saw a lot of people move into those areas, and now we're seeing the reverse happen. This is May 2024 through May 2025. Not a large decrease year to year, right? 6% is the highest. What you're seeing is in the middle, you're seeing those areas kind of stay closer to 0, maybe -1, maybe +1. And that's where I think the story is for the rest of the year. For the majority of the areas, you're going to see just a neutral market where it's important to understand, well, what's actually going to happen for the rest of this year? And that, I think, is the story. The main story is, check out what Greg McBride says. He's the chief financial analyst for Bankrate. Home price appreciation will be tepid when looked at from 35,000 feet, with many markets seeing little or no change in prices, but rising inventories, some formerly hot real estate markets shifting from a seller's market to a buyer's market, and will be susceptible to price declines. Yes, but here are the forecasts. We're looking at Zillow being more aggressive, Redfin saying, hey, the market overall nationally will drop -1, -1.4. The rest are saying we're going to go up a little bit. Fannie Mae being the most aggressive at 4.1. Where I think we'll probably end up being closer to 1%. So the MBA is closer to it. Maybe Wells Fargo's right on, but look at the average. It's blue, 1.9%. I'd say we're probably going to be at about 1%. We're heading into, or we're in the middle of a normal market for most of the United States. And now Mike Simonson, a good friend of mine, who just, by the way, got a new job. He's now the chief economist at Compass, also the co-founder of Altos Research, says the vibes for home prices are growing much more bearish. For the rest of 2025, we can see that inventory levels, especially in the Sun Belt, are now sufficient to put downward pressures on home prices. This seems likely to continue and spread to more states. However, there isn't much in the data that shows significant price declines, meaning we're going to start seeing this spread out through the United States, but I'm not sure that in those areas that have suffered already, it's going to decline much more. I say watch out for new construction. That is probably the key there. Most 2025 home prices forecasts are trending down, right? And I showed you earlier. Current forecast and original forecast. Look at the numbers where now their original forecast back in December of 2024, and then the highlighted ones, their current forecast, which we showed on that previous table. Now you have Morgan Stanley looking ahead through the rest of this year and into 2026. We don't expect mortgage rates to come down much. That's a challenge, right? At least not through the third quarter of 2025. So affordability will remain pressured. And I think that is the story we need to watch out for, because look at the forecast here. We look at all average of all three. Quarter 3, 6.68. Not much of a drop. Quarter 4, still 6.6. Look at through this, what is this? Quarter 2 of 2026. Still not much of a change. And that right there is a big challenge, because if that continues, affordability is still an issue. And then we have to check in, how's inventory doing in those areas that have a lot of inventory right now? And on top of that, how's unemployment? How's inflation? And how's the economy doing? So there's a lot of pieces to this. The one thing that looks like it's going to remain the same are the interest rates. So watch out for that. Mortgage rates expected to stay in the 6s. Again, right in the 6s. I would agree with everyone here. It's going to stay around 6.5, 6.6. I don't see them dropping much. If they drop, they're going to come back up. So you looking at this, my suggestion would be, if I'm buying or deciding to purchase a home, if I'm going to go, I would look at new construction first and say, well, can I get a deal in new construction? Because they're going to give me a lower rate. It's a newer home if I like the area. Second, I'd be like, well, did the interest rate drop this week? Because it might be a good opportunity to jump in while that rate dropped. Because like we've seen this last year, when rates drop, all of a sudden they go back up. They give us like this hope that rates are going to drop continuously, and then they go back up. So watch for that as well if you're in the market to actually purchase. The prospect of elevated mortgage rates throughout 2025 suggests that housing market activity will continue to be challenged. I would agree with the chief economist here of Cotality. Sales will remain low, but up slightly from last year. 2025 existing home sales forecast as of July 2025. The forecast is in blue. The gray area over on the left, 2024, that's what were sold last year. So 2024, we had just a little over 4 million in transactions. Those were sales. That is a really low number, by the way. If you go back to the peak where right after COVID or just getting out of COVID, we were at 6 million, over 6 million transactions. Average is about 5. So we're even low at 4. And look at the estimates. The highest is NAR, which is the National Association of Realtors, are probably more optimistic. They're saying, hey, well, we might have 300,000 more transactions, but even then, it's still not a lot. Newly built home sales will remain largely unchanged. And this is why you're seeing the builders saying, well, we've got incentives. We've got low rates that we can give you. Realtor.com says NAHB chief economist Robert Dietz says that given current market conditions, the home builder trade group is forecasting a decline in single-family starts across 2025. And that means the companies coming in, these builders coming in and saying, we're going to build more, right? That's what starts are. Let's start these new constructions. And if they're saying there's a decline in that, it could be a future challenge as well, because we still have an affordability issue, because people are still trying to buy homes. They just can't find affordable homes in the areas they want. Fewer newly built homes will be coming to the market. Seasonably adjusted annual rates of new home starts. Look at this. May 2025, it's less and less. We had a spike, and then all of a sudden it's like, well, it looks like we can't build as much as we thought, because the market now is inundated with inventory in a lot of areas. And Daniel Hale says shoppers in the market for a new home will still have options in the market and are likely to be in a good place to negotiate. But builders are already adjusting their outlooks and slowing the development pipeline, which could mean that new homes are harder to come by in the next year. Not just in the next year, we're probably looking at in the next few years. And so that's where we're at. I need you to pay attention to your local market. Pay attention to where new construction is being built, because that will affect prices, because they're undercutting current resales of those homes, and they're also undercutting regular rates. You're watching that happen. Where I want you to pay attention to also is that graph that I showed you, where you could see the middle cities, those middle metropolitan areas. We're becoming more of a normal market. And you've got the outliers, which were Florida and Texas, and the outliers were Connecticut, New Jersey, up here in those other areas. You've got to remove those areas, and you've got to focus on what's in the middle, which means we're going to be up 1%, we're going to be down 1% nationally. Remember the whole story on real estate? It's all local. So pay attention to this, but also pay attention to your local market. Share this with somebody you think that may need this if they're thinking of buying or selling, just so that they can gauge and understand where we're at as a nation. Please subscribe and turn on that little bell if you do. This is Housing Data Nerds. We'll talk to you again next week.